Welcome back to the Wall Street Podcast.
Good to join you.
Today we're digging into a Goldman Sachs report. It's the Asia LLC one, China Spirits Tracker, released September 8th, 2025.
Right. Focusing on high-end Chinese spirits, Moutai, Wuliangye wholesale prices. Looks like the decrease narrowed a bit. And some policy angles, too.
Exactly. Shaoxing's moves on banquets. So our objective is basically to unpack these trends for you: prices, policy impact, what the big companies are doing.
It paints a picture of a market, well, let's say, finding its level amidst some real headwinds.
Okay, let's start with those wholesale prices. Late August to early September. What did we see with the Kweichow Moutai?
Well, the original case price dipped slightly, RMB 25 down to RMB 1,820. The unpacked was down RMB 15 to RMB 1,805.
So smaller drops than maybe we've seen before, but year-to-date still significant.
Oh, absolutely. Year-to-date, the original case is down RMB 495, unpacked down RMB 415. So, yes, moderation recently, but the overall pressure is still evident.
And common Wuliangye, similar story.
Pretty similar, yeah. Down RMB 20 and RMB 10, depending on the pack, landing around RMB 840, RMB 825. Year-to-date drops are RMB 110 and RMB 90.
But Goyao 1573 was different.
It was. Held flattish around RMB 835 in this period. It is down RMB 25 year-to-date, but that stability is notable right now.
And the report mentioned something about channel profits.
Yes. Crucial point. For 5 tracked Moutai SKUs, these are like variations, Zodiac, Jingpin, etc., their channel profits have basically hit the break-even line. Some non-standard SKUs actually saw price drops too, while the 1-liter Faciem went up slightly. It's a mixed bag below the main products.
Interesting. That break-even point feels like a natural lead into policy. Shaoxing City, what are they doing?
They announced a consumption package, 15 measures, back on September 2nd. The eye-catcher is tiered subsidies for hotel banquets.
Subsidies, how does that work?
If you have, say, 5 or more tables, spend over RMB 10,000, you could get up to RMB 5,000 back per event. It's aimed at boosting general catering and local economy.
Trying to separate general consumption from official extravagance.
That seems to be the idea. But the report is cautious. It notes there isn't really any pronounced easing pressure on commercial or government-related banquet demand specifically. So that broader anti-extravagance policy drag, it's still there.
Okay, let's shift to company specifics. Kweichow Moutai, big moves there.
Definitely. The parent company is planning another share purchase, RMB 3 to 3.3 billion. That's after RMB 6 billion buyback already completed since January.
And they're pushing direct sales hard.
Very hard. 650 direct sales stores launched. They've lowered the application threshold even down to the county level. And critically, they have locked the Kweichow Moutai retail price at RMB 1,499 in these stores. Strict quotas, though.
What about others? Any diversification?
We're seeing that. ZJLD's craft beer, Nushi, is apparently a top seller on JD now. Second in premium beers over RMB 200.
Craft beer, interesting. Anyone else?
Jiugui Liquor reports better retail consumption, especially academic celebration banquets in Hunan, up 21% year-on-year. Western Hunan saw a huge surge, 273%.
Wow. And Wuliangye.
They launched a new Skidio 29-degree Wuliangye crush-on, clearly targeting, younger drinkers.
Not everyone's booming, though. King's luck.
No. They reported a Q2 revenue decline, pretty steep at 30% year-on-year, citing weak consumption and policy impact. Their focus now is on marketing, both B2B and B2C, and supporting distributor profits.
All right, let's distill this. First big question. Why the moderation in price declines for the top spirits, especially with some SKUs hitting break-even?
Well, I think it's a combination of factors. While the overall market is still pressured, the narrowing of declines for Moutai and Wuliangye, plus Kweichow's stability, suggests maybe a floor is forming. Company actions are key here, things like suspending shipments strategically, and that break-even point for channel profits. It likely disincentivizes further aggressive price cuts by distributors for those specific products.
Okay, second question. These local policies, like Shaoxing's banquet subsidies, how much can they really offset the big anti-extravagance push?
Look, Shaoxing's policy is smart in targeting general catering, trying to draw that line. It might help stimulate personal banquets, family events, things like that. But the report is pretty clear. It's not really moving the needle on commercial or government demand. That broader regulatory environment, it still dominates the high-end segment. So useful locally, perhaps, but not a game changer against the main policy headwind.
Makes sense. Third point. Beyond just price and policy reactions, what bigger strategic shifts are we seeing from these companies? How are they adapting?
We're seeing real diversification. Moutai's direct sales and fixed pricing isn't just about price. It's about controlling the brand narrative and owning the customer relationship. Wuliangye's Crush On is a clear play for demographics. ZJLD going into craft beer shows, they're looking beyond just Baijiu for growth. It's all about finding new avenues, new consumers, because the old playbook isn't working quite like it used to.
So bringing this down to the ground level, what's the impact for the general public when you're listening? That RMB 1,499 Moutai price.
If those direct stores make it genuinely more accessible, that could be significant. It potentially shifts feeding Moutai from being primarily an official or speculative good towards something, well, still premium, but maybe obtainable for personal milestones or high-end gifting at a predictable price.
And the other shifts.
Policies like Shaoxing's, even if limited, might subtly encourage more personal celebrations in hotels. And seeing brands like Wuliangye target younger people or ZJLD succeed with beer, it shows the industry is adapting to broader consumer tastes, not just relying on the traditional luxury market. It reflects a market that's evolving, impacting what choices might be available day to day. So wrapping up, the Chinese spirits market is clearly in flux. Policy matters, but so does evolving consumer taste. Companies are actively adjusting strategy.
A final thought then. How will these shifts, particularly direct-to-consumer models and branching out into new product categories, fundamentally change the way these iconic spirits brands operate, their distribution, and even their prestige in the years ahead? Something to watch.